Dear students, this is a video on difference between a debit note and a credit note. This image which you are seeing here on the desktop is the difference between a debit note and a credit note. What is this debit note and what is this credit note? See, when we are recording anything relating to credit purchases or credit sales, we as a buyer and we as a seller have to maintain some invoices, bills, or notes. Okay. So, as I have already told you guys in the classroom, how does it works? Let me help you guys understand it easily by describing it on this uh, board. See, I assume that you are a business, okay? You are having a business of PQR, PQR Private Limited, okay? Now, your business is relating to buying of goods and selling that to a market, okay, to a seller, wholesaler. Assume there is a wholesaler who purchases a goods from you and there is a supplier who supplies a material to you, okay, in the market. Now, what is happening here is you are purchasing the material from this supplier for your business. Okay, assume that you have purchased a material worth of 1 lakh rupee from this supplier. Okay, so what is happening in your perspective? It's a purchase, right? You have purchased a goods, business goods worth rupees 1 lakh from this supplier. Now, once you received those goods today, you found that a goods worth rupees 20,000 are not meeting the expectations of the quality. As per your expectation, the quality which should be there, that is not met. Okay, so you may feel that these goods should be returned back to the supplier. So the goods which came to you, okay, the goods which came to you, I mean goods means the purchases which you have done, you are returning those now. Okay, you are returning those goods to the supplier. That what we call that is a purchase return, right? Purchase return. So when you are returning those goods back to the supplier, how much rupees? For 20,000 rupees. This is just an example. That time the supplier has to pay you the money back, right? The 20,000 rupees money. For that, you will issue one document. Okay, you will issue one document to the supplier. That document is a debit note. That document is a debit note, means a buyer will issue a debit note to the supplier of the goods. You are the buyer here. You will issue a debit note to the customer to receive that 20,000 rupees back. Okay, that that supplier who had sold you the goods will issue a credit note to you. That person will issue a credit note to you. Okay, so here he is a seller, you are the buyer. Buyer will issue a debit note, the seller will issue a credit note. This is one transaction. In the same way, now, you as what the goods you had purchased for rupees 1 lakh and you returned those goods worth of 20,000. Whatever the goods were left to you, now you converted those goods to a final product, or you are selling that same product in the market, something like that. You are selling it to the wholesaler or a retailer or an agent, middleman, okay, that person. Now, from PQR Limited, it is going to some company who is buying from you, okay? That wholesaler, I said you wholesaler, right? Wholesaler, retailer, or anyone. That person, that company or a person is a buyer, okay? Is a buyer here. Now you are the seller. PQR Limited company or you as an individual is a seller, right? So now you have sold goods worth rupees 2 lakh to the wholesaler. Let's assume 2 lakh rupee goods you have given to the wholesaler. You have sold to the wholesaler. Now the wholesaler might have found some defects in the goods or product which you have sold to the wholesaler, and he is returning you back the 50,000 worth of goods. It just numbers are just assumptions. Numbers can be anything when we are solving the problems. Okay, numbers can be anything. So 50,000 worth of goods has been returned back by this wholesaler to you. So what you did was sales here. Okay, what you did was sales. Now when he is returning back to you, this is a sales returns. Okay, sales returns. Now after receiving the goods, you will be issuing a credit note to the wholesaler, that is a buyer, and this buyer will issue a debit note to you. Ultimately, it is simple that what is debit note? Debit note is issued by a person who have purchased the goods. Okay. Credit note is issued by a person who has salesperson who has sold the goods. Okay, who sold the goods or supplied the goods, something like that. That is the meaning of a debit note and a credit note here. Keeping If you observe this thing, the difference between the debit note and the credit note, you can see here debit note records the money the client owes to the seller. Okay, debit note, like I have purchased the goods. Now uh, this person who has given me the goods. Okay, so that time when I initiate a transaction, when I have to uh, return my goods back, when I'm returning the goods back, that time I will be issuing a note, a bill, that is a debit note. When I'm selling a goods, okay, when I'm selling a goods and that person, wholesaler, returning some goods to me back, that time I will issue a credit notes to the wholesaler. Okay, issued here. Debit note records the money the client owes to the seller. Credit notes records the money the seller owes to the client. Okay. Next, issued by the buyer or client to initiate a refund from the seller. Debit note will be issued by the buyer. Credit note will be issued by the seller. Okay. Debit note is issued when there is a purchase, return, and reduces the receivable. Credit notes is issued to initiate a sales return and reduces the payables. Debit note indicates upward revision of the purchase. Credit note indicate downward revision of the sales. Means upward revision of the sales purchase here means that the goods worth of 1 lakh which I had purchased. Okay, now I have returned that back worth rupees 20,000. That is making my purchases reduce and my cash to come back to me, right? So that is what it indicates, the upward revision of the purchase inwards. Whereas credit notes indicates downward revision, means the goods which I had sold to the wholesaler, worth rupees 2 lakh, out of which 50,000 worth of goods he has returned me back. Okay, he has returned me back. Now I have to pay him, refund the fund money of 50,000 to him. That will indicate a downward revision of sales to me. That means my revenue is reducing in my hand, because earlier I had sold it for 2 lakh rupee, but he has returned me 50,000 worth of goods back. Now it means that I have sold only 1 lakh 50 rupees, 50,000 worth of goods to him. That is the meaning of this upward revision or the downward revision. Let me show you the formats of this is a format of a debit note. Here you can see there is a name of the company, the bill, debit note number, the balance which is due. Okay, what is the rate per unit? What is the GST, CGST amount? Okay, all this, how many units has been returned, from where it is moving, all this kind of things will be shown in a debit note. Also, you can see the format of a credit note here. Credit note also shows you the company logo, company website details. Okay, there will be a heading like credit note and a date, particular date, credit note number, company name, address, customer name, address. Okay, why description, what has happened, why the sales is returning, or why the purchase is returning, like that. Proper details of the description of that, and the quantity which is refund. I mean quantity of that particular product, price per that product, and amount, total amount, everything properly. It will be explained in that debit notes and credit notes issued. Okay, I hope that this will help you guys understand the whole concept of debit note and credit note. Thank you.